Live here in Monte Carlo at the World's Entrepreneur of the Year Awards is Rajiv Memani, country head of EY in India. Rajiv, appreciate you joining us on CNBC TV 18. We were just talking about the dismal IIP numbers. Not a great start to the financial year. It continues to be patchy. What's your own sense about the strength of the economy? I mean, you talk to the who's who of business. What are you picking up?
No, I think there is a definite sense, Shireen, that things are improving, but I don't think it's an sort of thumbs up, overwhelming, suddenly things have changed. But I think people can see the green shoots. Most companies that I talk to, most sectors that I interact with clearly see an uptake. So whether it is on the auto sector, whether you see the building product sector, people are starting to see slight uptake. But I clearly, there will be ups and downs. The monsoons are very crucial in how things go. But overall, I would say that obviously these numbers are really disappointing. But overall, if I was to talk to most companies and get their sense on what's happening on the ground, and if you look at data of what's happening in each sector, clearly there's an increase. It's a very mild increase, not a strong increase, but an increase.
No, absolutely. We're seeing that across different sectors. Auto was one that you talked about where there is an improvement in sales. But what about confidence? What about the mood? What about the appetite to invest, to acquire? What's the sense that you get on that front?
I think definitely things are getting better. I think there I would probably be more assertive because that's more long term. And I think as people look at the macroeconomic fundamentals of India, I think they clearly today are, have now had a stable track record. If you compare it with what's happening in the world, I think it's clearly far more positive. If you look at asset classes, if you look at, say, private equity as an example, I think the number of large exits that have happened, the successful IPOs that have happened in the last 12 months, and some big exits, some big buyouts. I think clearly there is a lot of appetite to invest in certain asset classes. If I look at foreign direct investors, I think they are now getting more active in India, scouting for opportunities, because there's a lot of capital. There's no shortage of liquidity around the world. I think people are looking at where they can invest long term and where can they get the opportunities going. If I look at domestic business also, I think they're gradually getting ready. Consolidation is in the air. I think we can see consolidation starting to happen. We are seeing some businesses gradually getting out of 2 to 3 years of slumber, either because of commodity prices going up or regulatory clearances coming through. And I can now see some domestic companies starting to be active and and trying to be more proactive rather to start looking at consolidation. Also stressed asset as a class, through structured finance, through some of the initiatives that you talked about in the banking sector. There seems to be more activity around that. So definitely on the deal side, on the transaction side, on greenfield side, there is likely to be much more activity in the next 12 months. I would say that even today we are starting to see $8 to $10 billion of transactions happening. I think the one sector...
$8 to $10 billion of overall transactions?
Overall transactions every quarter. So if I look at one sector where I think there's definitely slowdown as compared to 2015 is the e-commerce internet sector. I think there's going to be some or maybe significant amount of reduction in capital that came in. But I think almost all the other sectors, whether it could be chemicals, could be building products, could be manufacturing, pharmaceuticals, we'll see probably much greater activity.
You were talking about FDI, and given that you feel confident about deals as well, do you think that we are likely to see significant FDI coming into, for instance, the insurance sector? Any new sort of money coming into the insurance sector?
Yeah, I think we will see, as it is, if you look at it, India has been the largest recipient of FDI over the last 12 to 18 months. So I think that story has started. And I think that will continue. I think it will be across sectors. In insurance, definitely, I think the FIPB clearances starting to happen, companies trying to accelerate realignment of shareholdings happening. So definitely financial services per se as a sector, I think even if you look at the new banks that are coming through, if you look at some of the IPOs of like Ujjivan and others that have happened, which have been really very successful, housing finance where we're seeing a lot of capital coming through. So I think financial services overall as a sector will continue to attract a large amount of capital, but the capital story is there. Foreign direct investment is in the last 18 months has probably been the highest.
Okay, so the capital story is looking good. What about the tax story? The government is saying the right things. You're part of a committee as well that's recommending what ought to be done on the tax front to the government. There have been several sort of clarificatory circulars that have been issued by the government as well. How are things on the ground when we talk about tax? Because clearly that has been the key concern when we talk about investing in India.
Yeah, absolutely right. So if you go back 2 years, 3 years, 4 years. I think one of the biggest issues, especially from 2011, 2012 onwards, that investors, business people have felt is ease of doing business and tax issues. And I think when this government came in, there was a lot of hope that something, significant, remarkable, revolutionary is going to happen. But clearly it's taken time for things to change. But I would say in the last 12 months, I've probably seen more activity on the tax side in a positive way than what we have seen in many years put together.
Okay.
So if you look at the big decisions, I think the big decisions were the government not appealing in the Supreme Court the Vodafone transfer pricing decision. Solving the Mauritius conundrum. Now, you may like it, you may not like it, but it was an issue. But they've dealt with it in a, upfront, in a prospective fashion.
Concerns of investors have been allayed on the Mauritius front?
There's still some issues that people will have, but at least I would say substantially the concerns have been allayed. Now, people may not like the answer, but at least there is predictability.
But is there clarity also on GAR now and life with GAR starting next year?
Yeah, I think so. GAR, what the government is doing is basically they are now trying to, solicit specific examples from companies and trying to put together responses for that. So basically what they want to do is to come out with a very detailed FAQ kind of thing when GAR comes in. And also they have put very high thresholds in terms of when GAR can be applied.
Okay.
So it's not that any assessing officer can just come in and apply GAR. So, the thresholds that have been applied when the kind of process that one has to follow before you invoke GAR, I think that also is pretty high. So it is something which is going to change things. It is something that's happening around the world. But I would say the way they are approaching it right now is much better. But coming back to your earlier question, Shireen, I would say that even in terms of procedural issues, number of assessments or number of these shocking kind of demands that used to be raised earlier, I think that's dramatically come down. If I look at transfer pricing, earlier transfer pricing, the number of assessments that went in for scrutiny were much, much higher. They've changed the policy, they've made it risk-based assessments.
Right.
So if I talk to our clients, if I talk to all our partners, colleagues and everything, the number of cases that are facing scrutiny assessments in transfer pricing has come down. Lots of contentious issues, for example, whether investment portfolio, whether that is capital gains or business income, or whether, when you look at income, from EPC contracts, whether it can be classified as association of persons or not. So I think, a lot of clarifications are coming through. And at least whenever we are engaging with the tax authorities, with the policy makers, with the Ministry of Finance, they're listening, they're understanding, and if they agree and understand that this is a real issue, and if one can come with a solution, then I think they're very quick to try and see how they can implement it.
Well, that's good to hear. So capital story is looking good, and even the tax story is looking significantly better.
But there's a lot to do in tax.
A lot.
So I don't want to feel that, things have changed.
That's what I said, but it's looking significantly better in comparison to the last 12 months.
Absolutely right.
Okay.
Absolutely
well,
right.
Rajiv, it's been a pleasure. Thank you very much for joining us here on India Business Hour. We're bringing you this show live from Monte Carlo, which is playing host to the EY World Entrepreneur of the Year Awards. A short while ago,